Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be leading the session. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen okay. The layout may look a little bit different. I know we upgraded or updated anyways, the look of the platform. So if you can't find the chat box, I'll just wait a little longer to make sure everyone's up and running. Okay, looks like I've got enough responses. Looks like everyone's up and running fine. If anyone has issues as we go along, please just let me know. So as we get going, keep in mind a couple things. One is that obviously all investments have risk. No one trade is guaranteed to have profits, and you should manage your risk in a way that makes sense for yourself. You can use stop loss settings. You could set up hedge positions in the opposite direction to cover risk. You can use our Ava Protect feature, which we'll go over a little bit that's available on our WebTrader platform and our AvaTrade Go mobile app. But in some way, you probably want to have a plan for managing your risk, understanding that profits are not guaranteed, but certainly each and every trade that you take does have a good potential for profit. And that's why we're here, obviously, is to go over ideas and concepts on how to best go about using information to find proper entry and exit points that will hopefully improve your P&L at the end of the day or the end of the week, etc. So we'll go over some of those ideas. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, I know we get a mix of clients in the webinars. Some are brand new to trading, others have experience. What we cover will be useful for everyone. It won't be over anyone's head or so low that you can't benefit from the information if you're experienced. I think you'll have something to gain either way. So stick with us as we go through the session. Now, technical analysis, real quick before we get on the live charts. What is technical analysis? It's looking at the historical movements, usually on charts called candlestick charts. There are other types of graphs and charts you can look at, but usually it's candlestick charts that traders are using, and you look for patterns, repetitive movements that maybe create some predictability as to what you think will happen in the future movements. And so some things that you're doing with manual methods of technical analysis would be finding price levels, support levels, resistance levels that look important, where maybe the price has trouble breaking above or below a certain spot, and maybe when it does, you see large momentum was needed with big breakthroughs at certain price levels. And so around these types of price levels, you can start to set up certain types of pending orders or do market moves if the market is in the right location at the time you're watching it. And sometimes you might use indicators to help you with that, to tell you when the indicator thinks the market is overbought or oversold. But usually it's best that you understand how the indicator is looking at the chart and be able to do it manually. And every indicator is doing the same thing, looking back at a certain period of time of the candlestick movements and doing its own analysis, its own technical analysis, and then giving you some kind of signal or picture of what you should do next. And so indicators are nice, but many times limited because they don't understand the fundamental news that's going on as well as you can. And so I always say manual methods are best to know how to do the technical analysis. Indicators are good supportive mechanisms to maybe be part of your checklist, where you say, okay, if I find my own price levels and I think that my entry point should be in a certain direction at a certain spot based on the fundamental news as well, then let's see if the indicator agrees with the timing of my entry. But only trusting the indicator in the direction that you've already identified is the direction that you're looking for a signal. And usually that combination with indicators tends to work best. As we go along, please feel free to ask questions or give input. I'm happy to share ideas as well. Real quick, we'll go to our WebTrader platform. And before we jump into looking at the features of the WebTrader, let's go back to our website. And you'll see if you're on our main website to get into the WebTrader, you just log in right here. Click log in, and that'll take you to this platform. Okay, and we'll go over that platform in a minute. If you're wanting to use the AvaProtect feature, which is how you can protect against any and all losses for defined time periods for a small premium cost, that's found on our AvaTrade Go mobile app, which you can download here. I just pointed at platforms, AvaTrade Go, and here we are. So it has nice features for managing risk. As you set up your trade in the order window, it tells you what your margin requirement is for whatever trade size you pick. It tells you if it has AvaProtect available, gold, silver, FX pairings, all have AvaProtect available. It tells you for different lengths of coverage time what the premium cost would be. Okay. Also, if you do take profit, stop loss, it calculates the potential profit, the risk to your stop loss mark for you, and converts it into your account currency. So you never have to enter a trade without knowing precisely the risk to your stop loss price and the potential profit to your take profit mark. How much margin is required? All of that's calculated for you in the order window, both on the AvaTrade Go mobile app and also here in the WebTrader platform. So just as an example, we can pull up an instrument that would have AvaProtect on it as well. So if we bring up gold, for instance, and you see how easy this platform is to use in terms of searching for instruments, that sort of thing, creating favorites list, it's very nice in terms of that ease of use compared to maybe the MT4 and MT5 platforms, which don't have these updated types of features. Now, this trades right on top of your MT4 and MT5 accounts, by the way. So it's the same accounts, and you can switch between accounts here. If you have multiple accounts, you can switch to your demo, to your other live account, etc. With one click, you can be in your MT4 account, your MT5 account, etc. Now, if we were buying or selling on gold, I clicked buy, and let's say I wanted to do, I don't know, 20 ounces. I say, okay, I think 0.2 trade size tells me the lot size, the number of ounces. Here's how much margin is required. And I might say, okay, I've got plenty. I've got 1,600 plus in my equity. It only takes 178 or so for margin. I could open that trade and have plenty left, 900 left or so, or I'm sorry, well over 1,400 left, almost 1,500 left to cover movement of the instrument. So it's showing me my margin that's required. I go in, and if I want AvaProtect or to program my take profit or stop loss, let's do the stop loss first. So if the price now is at 1785, maybe I believe it's not going to drop below 1750. So maybe I put 1745 as my stop loss. And then I look and I say, oh, here's my possible loss, 820 or so to that stop loss if I bought right now. And maybe I look and I say, wow, that's like 50% of my balance. And I decide, okay, I don't want to risk 50% of my balance. I'm glad I checked the stop loss. So maybe I say I still want the nice profit if I think that the movement will go up to, I don't know, 1900 again. Maybe when the US passes stimulus, which eventually they probably will, $1 or $2 trillion in stimulus, that could cause inflation fears again. Maybe gold goes flying back up, right? So maybe I have this in my plan that in the next couple days or something, maybe there'll be good news on stimulus out of the US, and I think that could drive gold up maybe. So, and this is just an example. I'm not saying that you should think this, but it could happen, right? So if I put 1900, I say, wow, look at that profit. It's over 100% profit potential. But I still say, you know what, I don't want to risk half my account. So maybe instead of putting a stop loss for now, I use AvaProtect. And I say, okay, I'll protect myself for not 3 hours, not 6 hours, maybe 2 days. And look, I'm risking 241. That's a lot less than 50% of my account, right? Like I was risking to my stop loss price. So I can have 2 days full protection, no matter how far gold might bomb the wrong way. I only lose 241, which I pay up front, the premium cost, and I'm protected. Any other losses when the trade closes get added back if it closes in this time period, or if it's still open when this coverage expires, then whatever the negative floating is gets added to my account and the trade can keep running. It's like starting over on the trade almost, with all the negative P&L added back to your account. So there are different, and then you could put your stop loss, by the way, after that. So you have options with this platform that you won't see on the MT4 and MT5 accounts. So it's very useful. Now, we're talking about technical analysis in this webinar. So how can this platform help you with technical analysis? Very simple. If you have a live account, the demo accounts don't have Trading Central active, but go to Trading Central. Those of you that have live accounts, if you have only a demo account right now, I would say upgrade to a live account, even if it's a minimum investment, so you can really get a feel for all the features. The economic calendar is available for everybody, but if we look at Analyst Views, these are free signals. You might have to pay many places for signals like this. They come in, the dollar index, different currencies. You can look at cryptocurrencies as well. You can switch categories up here. So if I want to switch what type of signals, I would just click this drop down and switch to a different category. Okay, so I could go cryptocurrency if I want, major Forex, G7 Forex, etc. Okay, and so we've got the most updated signals on top, time-stamped, and right on down. You see every few minutes there's another signal coming in. It tells you the technical analysis, the price levels, the breakout move expected with the blue arrow. It tells you the ideology behind it. Down here, RSI in this case is showing momentum on the downside, etc. It breaks it all down for you. Shams, yes, we offer MT4 and MT5 account, and this platform I'm showing you can trade right on top of your MT4 and MT5 accounts. Anything you open here shows in the MT4 and MT5 account, and vice versa. And you can trade right on the MT4 and MT5 platform as well, which I'm going to show you in a minute. We'll be on the MT4 platform in just a moment to do some technical analysis. So you have these free signals, very nice technical analysis done for you for free. Okay, now let's take a look quickly at the headlines. Even though it's a technical analysis webinar, it makes sense to see, well, what's happening fundamentally first. The platform we were just looking at is our WebTrader platform. If you've been with us for years and you have an older account, it might not have the WebTrader active because we just added the WebTrader platform in the past year. So if you don't see the WebTrader platform when you log in from here, from our main website, if you log in here and it goes directly to the client area where you do deposits, withdrawal requests, upload documents, then you need to request to your account manager or to our support department, our chat box, to please add the WebTrader platform so that when you log in from here, you see this platform and not just the client area. Then once you have this platform active on your account, you get to the client area from here. My accounts, upload documents, etc. All of the client area is available through this platform. Okay, good question. And also you would check out then, John, our AvaTrade Go mobile app because it has all those same features available through our mobile app as well. The Ava Protect, the trading calculator built into the order window, etc. Okay, so fundamentally, before we get on the live charts to do some technical analysis, what direction is the wind blowing for the different instruments? We probably want to know that so that we know if we prefer to trade up off a support level or down off a resistance level. You can maybe increase your percent chance of a proper entry and avoid false breakthroughs or false moves by knowing, well, which way is the market leaning today? And so if we look at the headlines real quick, I can see on this little area here, I like to use this as a summary, right? I see the futures are red. Okay, that's today's movement. The futures are today's movement already in the red on US indices. So already we say there's probably some fear on the market. Look at the volatility index. S&P 500 VIX, that's the volatility or fear index. Okay, many call it the fear index or the volatility index. It measures all 500 companies on the S&P 500 and tells you how much volatility is there or fear on the markets. And here it's up significantly, over 6%. Usually if it's up above 5%, that's pretty significant. 2 or 3% is showing some fear. So what we're seeing here is a significant amount of fear hitting the markets, and you see that in the volatility index being up over 6%. Then we look and we say we can confirm that because the futures are red. Futures are dropping, fear is up. We can see that in about 1 minute looking here. Okay, US dollar is actually weakening right now. Usually it strengthens when there's fear, but the US dollar's been weak because there's belief there's going to be more stimulus passed. So that kind of weakens the USD typically. I see some questions coming in. Let me pause just to answer some questions. Safiso, you can get education through the webinars, obviously. Also talk to your account manager. You could maybe get some one-on-one sessions to talk to them. Also, our YouTube channel has a ton of educational videos. Recorded webinars, all my webinars are recorded. Naeem Aslam's webinars are recorded. He's our chief market analyst. And other educational videos are found on our YouTube channel. Okay, so that's another place to find it. Shams, depending on your region, we have different methods for depositing and withdrawing. Yes, Skrill is an option in many places. I haven't heard of Perfect Money, but if you log into your account, go to the withdrawal section or deposit section, and look, it'll list all the options. It'll list all the web money options, wire options, credit card, debit card options, etc. That way you'll know for sure based on your region. Good question. Yeah, we'll look at the US Tech 100, otherwise known as the NASDAQ. For those of you that didn't notice yet or were confused, some of the instrument names were changed recently. For example, the NASDAQ now is called the US Tech 100 on our platform. The S&P 500 is now called the US 500, etc. So some of the names are a little different. We're gonna look at a number of different instruments. I'm not sure what you mean. Look at the order book in the platform. If you mean the window for buying and selling, the order window, we took a look at that already. This webinar, like I said, is recorded and will be available by tomorrow to watch it. So you can look back at that. And for that matter, all my past webinars are on our YouTube channel as well. So you can look each time we look at the order window. Very similar on the WebTrader. All right, good. I think I hit all the questions. Let's keep going. So European stocks edge higher. There are some earnings reports coming out today. Right before the open of the US market, both Credit Suisse and Barclays will have earnings numbers coming out right before 9:30 a.m. New York time. So before the US market opens, you're going to have big numbers coming out for Credit Suisse and Barclays. Whether they exceed expectations, miss expectations, we don't know. But what we do know is the market will probably respond in a big way as their numbers come out one way or another. Okay, so you can expect some great technical movements, reversals, breakthroughs today with those types of earnings numbers coming out. And there's a flood of other numbers too. If you want to see, well, where are the earnings numbers listed? If you're on the main web page, like for investing.com and other platforms, other websites, you see here it says earnings calendar. Click on that. It brings up your earnings, and you can scroll down and see all these companies are reporting earnings today. Some of them already reported, most of them not yet today. And you see Barclays, Credit Suisse. Here's Credit Suisse, Barclays. Credit Suisse already reported now. They reported pre-market open, like we were saying, and they didn't wait until right before the market opened. Looks like they missed the mark. Credit Suisse, look at those numbers. Earnings per share, less than expected. And revenue, less than expected. This is the revenue. This is the earnings per share. Both worse than expected. And you know, we still have Barclays coming. Here's Barclays here, and they have not reported yet, but they will soon before the U.S. market opens. So already some negative news to add to the fear we already saw. Remember, we saw up here over 6% rise in the fear index, the volatility index, and markets are red still. So which way is the wind blowing right now? Kind of negative for indices and stocks at the moment. Dollar edges lower. Feds retain easy policy stance. So we were talking about that. Now the Feds met recently in the U.S. and they said, listen, the minutes were released recently from a meeting in January, and they said we're going to keep easy monetary policy to make things easy for the economy, which means low interest rates, stimulus money, etc. That's great for stocks usually. Bad for the strength of the currency of the country. So this being the US that we're talking about, it's no wonder the US dollar's down further again today. Dollar index down. Why? Talking about stimulus, easy monetary policy. This information just came out. Those minutes were just released. So we're looking at a weak dollar. What does that do for gold, by the way, those of you who are gold traders and oil traders? What happens when there's easy money passed out and a weak currency? What happens to gold? What happens to oil? Kenneth, technical analysis is when we look at the charts and look at price patterns, and we're about to do that in a moment. Kenneth, you'll have to speak with support if you're having an issue with a third-party service like SharpTrader. Yeah, up. Attila, I'm with you. Usually oil goes up when there's easy money lent into the economy, which oil has gone up to a one-year high. And usually gold goes up if there's fears of a weak currency, because that causes inflation. And gold is typically an inflationary safe haven. And so if there's fears of inflation with a weakening currency, gold tends to go up. Okay, so those two things. So let's take a look and see if we can find some opportunistic entry points then, understanding that news. Stocks claw higher. That term, that means they're having trouble going higher, right? And fuel got hot. We understand that. Oil went up. Stocks are having trouble. They're clawing their way along. Looks like the UK is having some trouble. 1 in 4 UK firms plan to fire their staff if the furlough ends soon. That could spell some fear and maybe hurt the pound coming up. So if you can catch high points on the pound against maybe the yen or something, if you think things could turn bad in the UK based on these types of headlines, you could start doing technical analysis to find entries with the pound. And the energy freeze in Texas, if you're not aware of what happened there, all the windmills froze up. All these green energy initiatives have backfired a bit. And there was a lot of wind, but the windmills were not turning because they froze stiff with ice. And that hurt the power grid in Texas. And the biggest oil producing, natural gas producing state in the US, all of a sudden was dead in the water. So that helped drive oil prices up as well, because they're offline right now. If you read this article, they're not able to have their production facilities going at full steam anytime soon, because they're all having trouble with power and everything else. So kind of a mess there in Texas. People actually dying. It's not a funny situation because the power grid was so vulnerable with these windmills being froze up. So we start looking at maybe second thoughts about green energy. If it's anywhere in a place where it freezes so much, unless you have heaters on the windmills to melt the ice, which then maybe that's not so efficient either. Okay, so let's take a look then at the charts and get an idea on some different instruments. Gold, look at the daily chart on gold. I think this is very telling. Look at this support level down here. It hit this just yesterday coming into today. It hit down around 1768. I identified a long time ago a support level around 1767, believe it or not. So that's pretty close. let me get rid of some of these objects that are drawn on the chart. One second. If those of you who tried to come to the webinar Tuesday, I apologize. We had some technical issues. My screens were redone, and the timing of the support staff in ripping apart my system and putting it back together didn't go well on Tuesday. So that's why this didn't pop up on the right screen as well. My screens are swapped around, but I've got it fixed. Let's delete all these lines. Here we are. Okay, so this is the one-day candle support, and it was right here. The one-day candles around 1766, and it dipped to 1767 or 8 recently. So if you were thinking that there will be inflation fears with the U.S. maybe passing stimulus soon, this is a nice technical entry point for a potential buy. So let's say I wanted to buy on this for whatever trade size was right for my balance, and I take a market move. Now, why do I think, technically speaking, this is a nice entry point in terms of technical analysis? Because you see, these are one-day candles. So this support level here, and for anyone who's new to support and resistance, a support level is a price where the market came down, could not break, and then bounced back up significantly. So this is an area of support. It couldn't break this price level and went flying back up. Now it got close, and it's starting to respect that support level. It bounced up off of it already. So I see support on one-day candles. That's pretty significant, because that means that price level's been there for weeks, maybe months, right? Since this price level has been broken. So how much do I have to risk to put my stop loss below this support level? Not much, right? There's my stop loss. Where's my potential profit? Well, if I think there's inflation fears, gold certainly could come back up to this price level here. Why do I stop here? Look over here. You see, this was an old support level on the one-day candles. Support and up, support and up, support and up. And then it took momentum. Look at the size of these candles. Look how much momentum it took to break below this price level, right? So this is an old support level back here from back in October of 2020, okay? So as then I look at the current price, if it gets near that price level, that might be a spot where the movement could hesitate or even reverse back down, okay? That's this price level. This take profit is just before this old support level, which could be resistance at this point. It might have trouble breaking back above that level, at least temporarily anyways. Doesn't mean it won't break through. Could go rushing back up to 1950 for all we know, right? But I'm only risking from here to here, right? My potential profit is about 3 times that to this price level, okay? And that's more of a short-term move. If I'm a longer-term trader, I might have my take profit up here at this resistance level, okay, which is up around 1950. For this particular move, maybe let's assume I'm more of a scalper, short-term trader. Maybe that's my spot just before that first major resistance level, okay? And I'm not risking that much to take a shot at that. If it breaks this one-day candle low point here, fine. Then I give up on my buy. Maybe I put a pending sell stop down here also, if it breaks that support level to sell. Okay, any questions on this gold setup for the technical analysis or the fundamentals behind thinking that this support level will maybe hold? Oh, we already talked about, right? Weak USD leads to possible inflation fears, which can lead to strengthening of gold. And remember, gold's paired against a weakening USD here as well. So this low point that it's dropped to over the past weeks with a support level, it's an opportunistic entry point, okay? GBPNZD has been requested. So let's look at that. Okay, pound has been up against the New Zealand dollar. If we look at the technical analysis on this, 4-hour candles show some resistance. High point down, high point down, high point. Looks like it's trying to drop off this resistance on the 4-hour candles. You see that? So pure technical analysis move. Boom, I sold. Why did I sell on GBPNZD without even checking what's the economic situation in New Zealand? We already saw some news about Great Britain and maybe these firms needing to lay people off if the furlough ends, etc. So maybe there's some fear with that headline. We have some fundamental reason to think, okay, maybe the pound is due to pull back, right? Then we look and we say, well, look at this resistance level on the 4-hour candles. It tried to break this level once, back down. Tried twice, back down. Tried a third time, and look, it's pulling back down again. Okay, so how much do I have to risk in this move? Not much. There's my stop loss right above the resistance level. Resistance, resistance, resistance. If it breaks to a high point above that resistance, okay, small risk, I'm out. Okay. If this goes the way we think it could, you can pick your price level. Here's the first support level here. I could say, okay, I'm a scalper. I'll take my profit right there. If it drops down, first support level, I'm out. That's still 2 to 3 times more profit potential than what I'm risking to my stop loss. Okay. And so with the gold move, with this move, we're using the technical analysis to find opportunistic entry points to maybe, hopefully, have less risk and more potential profit if the price levels line up that way. You can't force that ratio necessarily, that you have 2 or 3 times more potential profit compared to risk. Sometimes it's the opposite if your entry point isn't as ideal. But with this technical setup, with this technical analysis, we can put our stop loss a short distance away and be beyond the resistance level and have our take profit further away, but still be above the support level. It doesn't have to break any price levels in order to bring our profit. Okay, so that's the advantage of technical analysis, right? Find opportunistic entry and exit points where even if you only win 40% of the time, you still can profit with this type of setup. And now, why do we trust that this might push down? There's some fundamental news maybe on our side right now with that headline we saw just a moment ago out of Great Britain about maybe a lot of firms being worried right now. They'll have to lay people off if the furloughs end. And so with indecision, with not knowing for sure what will happen, a lot of times that brings fear. Okay, and you might also look to pair the pound then against the yen, right? You could pair it against the yen as well if you believe that there's fear. So if we looked at the GBPJPY, which might be my preference, we looked at New Zealand paired against it because it was requested. But if we look at GBPJPY, we see a similar setup, right? And didn't we say there's fear on the market today? So maybe it makes sense to sell on GBPJPY rather than GBP New Zealand, because we saw the volatility fear index is up 6%. What happens to the yen usually when there's fear? Does anybody know? The yen is what we call a safe haven currency typically. When does the yen strengthen? When fear is up or down? Yeah, exactly. The yen tends to strengthen when there's fear on the market. So it might make more sense to sell on the pound here against the yen with your stop loss above this resistance level, which looks very similar to the resistance level against the New Zealand dollar. But maybe logically speaking, if you think there's fear on the market, maybe it makes more sense to pair against the yen rather than New Zealand. Okay, but obviously it's your choice what you'd want to do here. And again, my take profit might, if I'm scalping, might be just before the first support level. Okay, if I'm in this for more long-term move, maybe my take profit is down at the next support level down here. Okay, maybe that one I'll leave down further. Much larger potential profit now compared to risk. Okay, and so what else can we look at? GBPUSD is being requested. I think it'll set up similar to what we're looking at here. GBPUSD. You see it looks similar, but why maybe is it not as good of an idea to try and sell the pound against the USD? You know, we expect the yen to strengthen maybe if there's fear on the market, but what did we see is happening with the USD? It's weakening today. It's down. And so it's almost, if you expect the pound to weaken, you probably want to sell it against a currency that you expect to strengthen, right? So it's weak horse against strong horse. I think if you're expecting the pound to weaken and you sell with it paired against the USD, you're kind of doing weak horse against weak horse, right? There's a weak dollar. So it might not be the best pairing. Now, if you expect the pound to go up, if your view is the pound should rise today, then maybe it makes sense to pair it against the USD for buying on the pound, okay? It all depends on your perspective of which way you prefer to trade on the GBP. If you think it should keep strengthening, then pair it against a currency that you think should be weak, like someone about to give huge stimulus, like the USD. That's how that sets up though. This is a really rapid climb. There's a lot of momentum against the USD in this picture. So I'd be careful if you're thinking about shorting the pound. You might be looking at this for a potential entry point to go long. Okay, let's look at oil. I think oil's interesting right now. Crude oil. And you could be looking at Brent crude or West Texas Intermediate crude, either one. It's been very bullish. You see the huge climb. Now look at this support level. This sets up kind of nice. You see this was resistance here, resistance and back down. And then you see it broke the resistance and now it came back down to the resistance level, which should be support now, right? That should be support. So with the potential for stimulus coming, with winter really devastating some areas right now, increasing energy demand for heat, and at the same time, decreasing production capability in Texas, it looks like maybe if you buy on oil here, the fundamentals are behind you on this, and you don't have to risk much to get below the support level. Okay, there's the stop loss, just below this support level. The old resistance level broke through with momentum. It pulled back down and started to bounce off that support level already. You see the wick. So you don't have to risk much. Certainly it could break the support level with the fear we saw in the markets today. Usually fear on the markets, oil drops. But that wasn't the case today so much because the USD is not strengthening, it's weakening. So with that fundamental situation, maybe you trust this support level. And then where would my take profit be? Well, certainly it has the capability to reach somewhere near today's high or yesterday's high. Let's see, what day did it hit this? The 18th, that's today. So today's high, just about 10 hours ago, it got up over 62. Okay, so I'm risking about a third or half of my potential profit here. Just getting back to today's high, I have double the potential profit of what I'm risking to my stop loss approximately. So this is a nice technical setup and the fundamentals are on our side. You know, decreased supply because of what's happening in Texas, stimulus on the economy, potentially out of the US, that could drive oil back up. I mean, that's why it went up to 62 today in the first place, right? There's crude oil inventories aren't until later today. So we do have crude oil inventory reports coming out later today. I can show you the time. If we go back to investing.com and we go to the economic calendar, instead of the earnings calendar, go to the economic calendar, and crude oil inventories are listed here. Gasoline inventories are coming as well. And here's the crude oil inventories report coming in here. And you see it's a 3-star announcement, meaning high volatility expected with that news as it comes in. The general effect here, if crude oil inventories are higher than expected, that tends to pull oil price down. And if they're lower than expected, that tends to drive price up, meaning less supply, higher price. And if you look here, the forecast is a decrease in inventories, a decrease by 2.429 million barrels. So it's expected that the supply will have shrunk even more, which it makes sense then. Until those numbers come out, the expectation is a decreased supply of oil. Oil, that's another reason maybe to buy off the support level right now and maybe close before the numbers come out, because the numbers could disappoint, right? The numbers could come in that there was an increase in inventories. What would happen to oil if that happened? Probably it could shoot down, right? You don't know for sure what the numbers will be, but what we do know for sure is right now the expectation is a decrease in inventories. So with that said, if we go here, we say, okay, if the expectation is a decrease in inventories, why should oil break this support level? Why should it go down? It has reason to go up if the expectation is a decrease in inventories. Okay, so that kind of supports our case here with taking a shot maybe at a buy on oil off the support level. Certainly you could sell on oil, right? You could have the opposite opinion, but the technical analysis gives us a nice support level here to take a shot at buying from above the support level. If the crude oil inventories disappoint and they're higher inventories than expected, you could have a sell stop pending order down here ready to go. Okay, so there's no reason why I can't buy now, but also prepare a sell stop pending order, sell stop at a price at maybe 60.4, 60.3. Okay, if the price breaks the support level and hits this price, then it sells, because boy, it must have been the opposite of what we were expecting if it breaks the support level. So you can prepare for potential news in the inventories that maybe could be the opposite of what you expect, right? So if the price level breaks, you can get in on a sell and then put your stop loss back up here above the broken support level and your take profit somewhere down here. Okay, this was a rapid rise in oil. There could be a reversal. So even if you're buying on oil now, based on what you know now, you also could prepare a pending order for what you don't know. That maybe those numbers come in bad later today as far as oil prices are concerned, and maybe oil plunges. So even at the same time, I believe a buy might make sense. I've got my sell stop ready to sell, and I can risk manage that however I see fit. I could put my stop loss back up at 61.2, something like that. And my take profit I could have down at this support level down here, maybe 59. Okay, so there's my pending order setup in the opposite direction of my market move. So if I don't win on my buy position, then I'm likely to enter on a sell position. No problem. I only need to win one and lose the other, and I'll profit, because my potential profit's more than double what I'm risking in this setup. Okay. Preparing for the unknown and trading with the known. That's kind of the strategy here. Silver, sure, we can look at silver. Silver tends to move a lot like gold, and we looked at gold already. Okay. You see silver's pulled down just like gold did on a support level almost. These are 4-hour candles. Support, support, support. It's been tested how many times here? 1, 2, 3, 4, 5, 6, 7, 8 times this price level's been tested in the past few days without breaking. Okay. If stimulus passes in the US, you could see inflation fears and a weakening USD, which tends to drive safe haven metals up. So this is a possibility here that silver could respect the support level. You could do a market buy right now on silver if you trust this support level, right? If you want to put your stop loss below the support level right there, take profit You could go at the first resistance level if you're a scalper. Little bit more potential profit than risk. If I'm looking more long term, I could have my take profit up here. Wasn't that long ago that oil, or I'm sorry, silver was up above 29.5. Okay, that's up to you though, the exact stop loss take profits that you'd want. You also could prepare a sell stop, just like we did with oil. If it breaks this support level, maybe there was bad news about stimulus in the US, maybe there's more fear and the dollar strengthens and boom, down goes silver. So you could have a pending sell stop on silver just below this support level, somewhere down here, with a price level entry on your sell stop somewhere about there. Okay, so that silver sets up very similar to gold right now. All right, we could look at some indices before we end the session, or at least one indice. A lot of they all look the same almost. US 500 pulled back with the fear today. Remember, we saw fear was up today. Now it creates opportunity. There's another support level, just like gold, just like silver. They pulled down, so did the indices. Okay, the same thing that pulled gold and silver down, a strengthening US dollar, was the same thing that pulled the indices down. Some fear, some strengthening of the USD. Now the USD looks to be weakening again today, even though the fear is still up. If stimulus passes, what do you think happens to the major indices? Whether it's the FTSE, the DAX, the Nikkei, the US 30, the US 500, the NASDAQ, etc. What do you think happens if the US, boom, a headline comes out that they're going to pass stimulus soon? Whether it's $1 trillion or $2 trillion of stimulus, that tends to drive up the equities. They love free money, okay, and low interest rates. So the Feds already came out and said they're going to keep low interest rates, support the economy. Why should these major indices keep dropping? Maybe this support level gets broken, then you could try re-entering at the next support level down here, okay? So you could have a pending buy stop here, understanding that if you do a market buy now, which I just simulated, if I do a market buy and this stop loss breaks, this support level breaks, and I hit my stop loss, then I could have another entry here with not a buy stop, a buy limit pending order that buys from a lower point, okay? I could even put my stop loss below that support level as well, understanding that, hey, there's fear today, so maybe this support level breaks, but you figure there's stimulus coming, so I don't think the next support level will break. So take a trade size that you can widen the strike zone. You don't have to be so critically accurate. Maybe lower your trade size, get your stop loss below one support level and below two support levels. This was old resistance right here. See all this resistance here, resistance, 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 resistance. This is a support level now. So if it breaks the first support level, you don't have to give up. You can wait and say, okay, only if it breaks the next support level, then I give up on my buy. Just take a trade size that allows you to put your stop loss that far away without risking too much. Okay, now I can be patient and wait for stimulus to be agreed upon in the US. Maybe they're going to argue about it still for another week. They probably will. That's what happens in Washington, D.C. They argue, and then at the last minute, they pass something. So if it goes up now, great, you're in. If it breaks that support, you're okay as long as it doesn't break the next support level before good news may hopefully come, right? If you're more patient, you could just say, okay, I won't buy yet. I'll put a pending order at the next support level, and only if it drops down to this support level, then I'll buy, right? Or you compromise. You say, okay, I buy now, like I did, with a smaller trade. Then I also, in case that one goes bad, in case the first support level breaks, I do a pending buy limit, which buys from a lower price, and I'll buy from 38.50. Just before that next support level, I'll buy again, okay? So now I get in, if it breaks that support level, I get in with another trade of the same size. Now I have twice as much I'm in, but now my stop loss on this one only has to be a small distance away. So I'm in if it goes up now. I'm in even more if I get a better price. Okay, so that's kind of a 1-2 strategy, knowing that you're being patient with the stop loss on the first one, and you're taking half the trade size you'd like. And if it gets to the better price, you take the rest of your trade size with both stop losses somewhere down here. Okay. I think this is a good place to stop. And we just as easily could have looked at US 30. It looks exactly the same. It pulled down to a support level. We could have looked at the NASDAQ. Same thing. It's down on a support level. We could have looked at the FTSE. It also pulled back. We could have looked at any number of indices, and you're going to see something very similar. A pullback all around the globe on major indices. If you like the entry price and you trust the support level, maybe that's a spot to buy. If you think it could drop further, then it's a spot to sell. Like the Nikkei did not reach the support level yet. Support level's down here. So the Nikkei looks like it has a ways to go still before it finds the next support level. So you got to pick and choose which ones look best, technically speaking, for the direction you prefer to trade. All right, everybody, thank you for joining. I appreciate your participation, the good questions. Any questions before we end things today? All right, great, everybody. Thank you for joining. And we'll be back at it Tuesday evening with my system working this time. Tuesday evening, 6 p.m. GMT time.